So assuming that you don't live under an absolute rock and you've got connection to a cell phone, social media, newspapers, some sort of media, you have been hearing a lot about these tariff threats coming from the United States onto Canada. And effective Tuesday, February 4th, Trump has announced that any imports coming into the United States from Canada will be tariffed at 25% and a 10% tariff on energy. The big question, at least for me, since I'm in the real estate space and a lot of you who watch this channel who are curious about real estate, is how will this affect the Canadian and Toronto real estate market, which is what we're going to dive into today. Now, I want to start off by saying this is a little bit of a speculation because I don't think anyone really knows exactly how this is going to play out, and I don't think even Trump knows how it's going to play out, nor does the Canadian government. And keep in mind that these tariffs have not been put in effect yet. They will come in effect as of Tuesday. How long they will be there, I don't know. It could be forever, it could be a month, they could come to some sort of agreement and kibosh this whole thing altogether. A lot of people seem to think that this is some sort of a bargaining chip that the United States, Trump, is using in order to get something out of Canada. Whether that actually is the case, again, none of us really know, but what we're going to do is talk about how, if these tariffs do stay in, the potential implications they could have on the Canadian economy and the real estate market moving forward. I mean, regardless of what happens and how long these potential tariffs come into effect and stay in effect, I think it's pretty safe to say that this would not be positive news for the Canadian economy, and obviously anything that's bad for the Canadian economy is going to be bad for the real estate market, and it's going to affect our economy, I think, in three ways. Starting off with interest rates. Interest rates could definitely get affected by the tariffs put on Canadian goods to the United States. Obviously, this is going to have a massive impact on our economy, and the Bank of Canada will be put in a situation where if we fall into a recession or our economy starts to slow down due to these tariffs, then they're going to be put in a position where they may have to adjust interest rates in order to combat that. So if we fall into a recession, they will drop the rates much like they did in COVID, right? They saw the economy was going to be coming to a halt because of these external factors, and they really started cranking down on interest rates, which could sound like a good thing. If you're on a variable rate mortgage, maybe this is going to be a good opportunity to lock in. I know a lot of people looking back at the pandemic, were thinking, myself included, who's on a variable, wow, that would have been a great time to lock in for a 5-year. I'm not saying that that will happen, but it could potentially be a factor if they end up putting on tariffs. And if those tariffs stick around, it may put the Bank of Canada in an interesting position where they're forced to actually continue to lower rates. Again, this is really hard to predict how this will actually pan out because also tariffs could potentially be inflationary. And if inflation starts to go up, typically the Bank of Canada will actually start to raise rates in order to combat that. So they're going to have this weird balancing act. It's really hard to tell exactly what would happen, but it sounds like we would probably be put more into a recessionary period where they would actually be forced to lower rates. But again, that would just depend on how long these tariffs would actually stay on for, and that is yet to be seen. But I think that it is fair to say that if these tariffs do stay on long term, that it will have an impact on interest rates moving forward. The second big factor here is going to be unemployment. So if they do put on tariffs, the whole idea here is that, let's say for the car industry, the United States is going to put massive tariffs and basically try to force companies to bring their products and manufacture them down in the States rather than crossing the borders multiple times. If that does happen, it could potentially lead to hundreds of thousands of job losses. And how that really plays out is going to be dependent on where you are in Canada. Certain areas are probably going to get hit harder than others, but it is safe to say that, people are less likely to make real estate moves when they're not sure if they're going to keep their job or not. The only people who would be very sure to make moves are potentially people who ended up losing their jobs and would be forced to sell their homes. And again, this might be, a 6 month to a year thing that the tariffs would have to be on before we really started to see that effect of added inventory from people losing their jobs and, putting their houses up for sale and seeing a decline in the market because now we have more supply. Do I personally think the tariffs will will be on long enough to see that. I hope not. But again, obviously nobody knows at this point, but that is definitely an area that this would affect the real estate market. And again, depending on where you are, certain areas might get hit harder than others. If they end up, keeping the 10% tariffs on the oil and gas industry in Alberta, it could hit them very, very hard. And anybody in the car industry here in Southern Ontario could definitely affect that industry as well. In terms of Toronto specifically in the 416, it's yet to be seen exactly how big an impact this will have on it. But if it does lead to major job loss in your specific area, it definitely will have an effect on real estate prices. And the third factor, and maybe the most immediate factor, would be market sentiment. This is definitely going to change how people feel about investing. If there's one thing that we know, it's that in times of uncertainty, people are less likely to make moves. When there's huge changes happening around them with the government, with the economy, people typically take a sideline when it comes to making major financial decisions, which is obviously going to include your real estate plans, whether to invest, whether to buy. But I think this is definitely going to have a negative factor in the market sentiment. It's definitely going to keep people on the sidelines a little bit more and influence their decision on whether they should get into the market, invest, or make a move. So if you're listening to that all sounds probably pretty dang scary. I mean, definitely tariffs is a bad thing for our economy, which would be a bad thing for our real estate market in terms of prices going up. But I mean, I've read the comments on my channel, and there are a lot of people who are not really hoping that the market goes up. They feel that it's very expensive. So let's go over the main types of people who are making real estate transactions and how this benefits them, because a poor market is going to be good for someone and bad for others. So realistically, there's 4 types of people who are going to be transacting in real estate. There's your first-time home buyers. There are your distressed sellers or your move-out sellers, people who are just leaving the market altogether. There are your move-up and move-down buyers. So these are people who are going to be selling a property to move up into a bigger property or selling a property to downsize into a smaller property. And then there's your investors. So starting with the first-time home buyers, I mean, for first-time home buyers, this is kind of the chance that you've all been waiting for over the last 5 years, listening to, first-time home buyers express their pain with me, with other people. Just the entire market sentiment has been, we're waiting for a crash. We want the real estate prices to correct. And they have corrected. Flipping over to this graph by BMO, which is one of the more popular graphs as of late, where they basically graph all the most recent housing corrections in Canada over the last 30 years, and they compare how they've all kind of, played out. We're the black line right here. And as you can see, we are in line with one of the worst housing corrections there in Ontario in the 1990s. And you can see that, from the 100% peak here, we've come down to, 15% drop on average. Obviously, that's going to differ depending on what property class you're looking at. But we have essentially felt the repercussions of a housing correction. Could it go a little bit further down and match the Vancouver prices? Yes. But I mean, just looking at the historic data, is there much more room to go down? It seems like we've felt the majority of the effects of a housing correction already. So for first-time homebuyers, and I know that I've had quite a few over the last few months, they felt like this was their opportunity to actually get into the market. This was the correction that they're looking for. And especially for those who are looking to get into entry-level prices, I just had a client pick up a newer building, one in Den with parking for $500,000. Those homes are now becoming much more affordable, much more easier to get into, where you can get in, negotiate your deal, have time to actually have conditions, take your time, get the right home, and feel good about it. Now, for these sellers, distressed sellers, and people leaving the province altogether, I've seen this as well. I've got a listing coming up, somebody who has decided to leave Toronto and move to Alberta. And this is definitely becoming a lot more common, especially with prices being the way they are and people just finding work elsewhere. And then on top of that, like I mentioned earlier, with these tariffs coming in, if people start losing jobs, this is when you're going to start seeing people selling their homes, not because they are selling and moving up or moving down, but maybe because they are in distressed situations where they just simply can't afford to hang on to it because they've lost their jobs. So that could potentially increase here in the next 6 months to a year if these tariffs stay on. For the upsizers and downsizers, these are the people who are trading out of necessity. And honestly, they're going to trade no matter what, or they're very likely to trade no matter what goes on with the tariffs, right? If they're upsizing because maybe they've run out of space in their home, or maybe they're getting old and they're selling their home and downsizing, but these trades are likely going to happen regardless of tariffs going on or coming off. They're trading, like I said, out of necessity and not because of speculation in the market. And then that being said, too, I'm considering these people are trading and they are staying within their market to some degree. So they're not, selling their home and then buying in Alberta. They are selling their home and staying in Toronto. So the timing of their deal is less relevant because they are trading within the same market. So for instance, a big one that we're seeing right now is the condos moving up into homes. You're going to be selling your condo and then buying in the same market. So your timing is a little bit less relevant. And I know I'm having this conversation with a lot of people, and this is going to become a whole another video on its own that I'm going to do probably next week on how to actually sell your condo and move up into a home, because I'm having this conversation with a lot of people. But a lot of people are saying, hey, I'm going to wait for my condo to go up in price so then I can sell it for more and buy the home. If that's the case, in a lot of situations here, the condos are actually moving sideways, or if anything, maybe going down in price, while those freehold homes are actually going up in price. So in most cases, it still makes sense to sell the condo, even though you may not get the price that it was originally worth maybe 2 or 3 years ago, because the freehold homes are likely to outpace the condos moving forward. But again, regardless, I feel like those transactions are going to happen regardless of these tariffs. And finally, the investors and how these tariffs will affect them. I mean, for the most part, over the last couple of years, investors have been on the sidelines. And I think that that's pretty interesting, because these are the moments where you see who real investors are versus the speculative investors, or the gamblers, you could call them. General investing principles say that you want to be getting into markets when there is uncertainty on the downswing. But in reality, we all know that it's much easier to get into an asset when the market is going up. And I'll tell you firsthand, I feel this as well. Whether you're buying real estate or you're buying stocks, when you see it's going up, you get that FOMO, and it's really hard not to just jump in and get emotional on it. But we do know that the best time to get into anything is when it is on a downswing and the market is moving the opposite way. So how will this affect investors, or how should it affect investors is kind of the question. It should actually bring investors to the market, because this is going to present a very good opportunity for people to get into really good deals. There's going to be added inventory, and I think that this spring is going to have a ton of inventory regardless of these tariffs. But in reality, are investors going to play ball? Honestly, they're probably going to sit on the sideline until the market decides to go up. I would say that if you're a real investor, this is a great opportunity. I know for me, and for anybody who's been following my YouTube channel, you've seen that I personally recently picked up a investment property for myself last month. So I guess it really just depends on what type of an investor you are. If you're the one who's looking for a deal in a downswing, this is a really good opportunity. You do have to have a long-term plan for that property, understanding that it may trade sideways for the next few years. But if you're one who just wants an immediate return on your equity, then you got to wait till the market goes up. Now is definitely not the time for you to get in, because there is a lot of uncertainty in the air, and we don't know exactly how long this will play out for. And these tariffs will have an effect on how long it plays out for. So basically, if you're a flipper, now is not your time to shine. So I hope that helps give you an idea as to how these tariffs may impact the market and different types of buyers and sellers moving forward. Like I said, there is a lot of uncertainty as to how long these tariffs will be in effect for, if they even come to effect, or if they come to some miraculous agreement here before Tuesday. That seems pretty unlikely. Very curious to hear your thoughts down in the comment section below. Let me know what you think of these tariffs, how long they'll be around for, and how they may affect the economy and real estate prices. Always love interacting with you guys in the comment section and seeing your opinions. As always, if anybody wants to get in touch with me, I've left a link in the description below where you can reach out and book a call. And make sure you like, comment, and subscribe, and we'll see you on the next video.